Another company, Birlasoft, the past quarter's numbers were weak. The stock has started off with a cut of around 5-6% odd. However, that dip has got bought into. So currently, in fact, the stock is down 1.5 to around 2% in this sort of a market. To understand about the way ahead, we're joined by Angan Guha, the Chief Executive Officer at Birlasoft. Hi, Mr. Guha. Good morning, and thanks a lot for joining in. Well, quarter three was a weakish set of numbers. You have guided for some more pain in quarter four, as furloughs are likely to hurt. So just my question to you is, no other company has spoken about these extended furloughs. So why particularly for Birlasoft, point number one? And for the 9 months as well, the revenue growth is very, very measly at around 2%. So FY25 is likely to be a washout. What about FY26? What kind of a growth number can you get back to?
So Nigel, first of all, thank you for having me on the show. See, we faced some furloughs in Q3, which we had not faced earlier, and it is outside of BFSI. So from that standpoint, from our perspective also, it was a little unheard of, and it came in the life sciences vertical. So we see the furloughs extending to the month of January, and it is specific to some of the clients that we serve. You must remember, Nigel, our life sciences business is more of a med devices business. And some of the med devices companies are facing some headwinds in the US. So we are seeing the furloughs extending a little bit. But by January, the furloughs will be done. I think February, March will be better months from a revenue standpoint. So from that standpoint, I feel Q4 will be also slightly muted. Now, for the year you spoke about, you're absolutely right. FY24 was a terrific year for us. FY25 is being a muted year for us, not only from a revenue perspective, but even from a margin standpoint. It's a little too early to guide for FY26. And like I was saying in the investor call yesterday, that I would want 4Q to first get over, and then we will give a view as far as FY26 is concerned.
Okay, all right. So some uncertainty, but quarter four will be a soft one. And at least you've given a heads up to the street, so the street is not bracing for any kind of shocker. Let's talk about profitability then. I recall in the past you've said that ideally you would like to go to mid-teens margins. For the time being, you're hovering around the 12.5% or thereabouts, give and take the wage hikes that come about. Do you see an improvement in margins starting quarter four? And by when do you get to this 15% margin? What's the target?
So Nigel, look, we don't give specific guidance, but one of the reasons why our margins were down this year is because, like you rightly pointed out, our revenues have not grown. Ideally, if I could have delivered double-digit revenue growth, our margins would have held. And now we're continuing to invest in our business. Even if you look at Q3, we gave our wage hikes. It was a quarter where we saw tremendous amount of furloughs, but we were able to hold our margins in Q3 vis-a-vis Q2. So from that perspective, operationally, I think we have done better. Look, our endeavor will be to now to kind of operationally drive quarter on quarter to build up the margins going forward. We've continued to state that we will be more comfortable in that 15 to 16% range. It may take me 4 quarters to get there. But as we exit FY26 maybe, which is 4-5 quarters from now, hopefully we will get to the 15% range.
Okay, all right. So by the end of FY26, the street will take that. Let's talk about the net new deal wins. That as well, I think, is at an all-time low. It was only around $64 million. What caused that? And will that number improve in the coming quarters?
So Nigel, look, I mean, if you look at our first half year, the signings were not very good. But the quarter that just went by, Q3, we delivered record signings. I mean, at least in the past 3 or 4 quarters, this has been the best quarter in terms of signings. Now, I admit that almost 70-odd% were renewals, but 30% were new deals. Q4, we are working on a couple of deals. If those deals come through, and those will also be in new logos, I'm expecting the Q4 signings to be as good as Q3 or even better. And if we can crack those 2 or 3 deals, then we'll be in a different position as far as Q4 is concerned.
Okay, Mr. Guha, business seems to be, have various points, and give us a fair idea about how you see the revenues, the new deal wins, the profitability as well. The other point is, I think your current market capitalization is roughly around 13,500 crores or thereabouts. And you have, 15 to 20% available in cash. I think your cash in books is around 2,000 crores ballpark?
Yeah, roughly, yes.
All right. In this time of uncertainty, will you all be thinking about rewarding your shareholders, maybe do a buyback, maybe give a one-time dividend? The stock, I recall, had gone to 850 or thereabouts. It's come back down to around 500 rupees. So what's the idea with regard to utilization of cash? Will it be to reward shareholders, or do you all have some inorganic growth on your minds?
So, Nigel, look, we always look at inorganic opportunities from time to time. Clearly, we've done a good job on executing and cash flow generation, right? Our operating cash flow to EBITDA, as you would see, is almost about 155%, which has been one of the best in the industry. So, from that perspective, we are very happy that we've been able to generate cash. Now, I want to deliver 2, 3, 4 quarters of organic growth, before we look at an acquisition. Because I don't want the management to get distracted to go and do an inorganic buy when we really have to deliver, at least 3 or 4 quarters of organic growth. So we'll be focused on that. As far as dividend payout is concerned, our CFO has clearly outlined our policy. We will stick to that policy, and we keep rewarding shareholders with dividend payouts every year. So we will continue with that, Nigel.
And buyback?
That's a corporate action that is for the board to decide, not for me to say. We will see as it comes.
Okay, all right, Mr. Guha. We appreciate you joining in. It was a soft quarter 3. Quarter 4 as well is likely to be a little bit weakish, but you're optimistic about prospects of FY26, and maybe towards the end of it, those mid-teen margins is the direction that you'd like to head. Thanks a lot for joining in. Well, by the way, while we were having that chat with Mr. Guha, the markets have drifted down lower. We've almost moved to the 22,800 odd mark, which is the key reference point because that's the low that we saw in late January. 22,787, that was the recent low. We're not too far away from those levels, but that's only about the headline index. The problem is with the broader markets. Now we have seen a further correction, and I think 3 days on the trot, when you see the mid-cap index pull back by 2.5%, and we're just an hour into the trading session, that's the pain point. You have only around 180 stocks now that are advancing from the Nifty pack itself. So difficult times, it appears so.
No, absolutely. And, the small cap index is basically broken down below with a 3% cut. The small cap index, if we can put that up, it's broken down below the January lows. The January low was 15,684. We are at 15,570 now. So while the Nifty is about 20-30 points away from that 986, 786 kind of levels, 22,800 level. 786 was the absolute lows. So we're at 833. The small cap index is broken down below the low. And let me just look at the mid cap index as well. Here also we closed at the low, January low yesterday, and we've in a clean way cut through that. So 2.5% lower on the mid cap index as well. 10:1 is the declines to advances ratio. So it's happening very, very fast. And I suspect there will be margin calls, etc. as well, which perhaps are playing out, at least and that typically happens after a fall like yesterday, should kind of sort of work through the system by about 11:30, 12 or so. It's a fair bit of pressure across the board. What we'll actually also try and do is get, some of the CEOs of broking companies, for example, HDFC Securities, ICICI, and others, because what's the margining on the margining side? How are things looking? The MTF book, which is margin traded funded book, had grown exponentially over the last couple of years. That is essentially a levered product, and it's a funded product. So I'm assuming there would be pressure, and that essentially those are products typically where this kind of margin pressure and margin related squaring off would be happening. But 250 points, and we are basically back at January lows once again very, very quickly. We'll take a quick commercial break here. Mitesh will be with us with some a quick view on the market and any trades whatsoever. Stay tuned.